The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box. Here are your headlines today. The S&P 500 notches its longest winning streak since 2021, closing above the 5,600 mark for the first time, as attention now turns to today's US CPI print. NATO leaders prepare to announce fresh aid for Ukraine while strengthening their criticism of China over its alleged support for Russia.
From foldable phones to smart rings, Samsung unveiling a slate of new products at its Galaxy Unpacked event, with the tech giant putting upgraded AI models at the center of its latest lineup. And top Democratic fundraiser George Clooney adds some star power to the growing calls for President Biden to drop out of the race, with former House Speaker Nancy Pelosi telling MSNBC any decision must be quick.
It's up to the president to decide if he is going to run. We're all encouraging him to make that decision because time is running short.
Well, the rate hike rhetoric seems to be continuing to push things along, so too the tech stocks. One may have wondered and asked a few question marks about whether this rally was set to continue. We keep hearing words around having to need a pullback then in this market. Well, it doesn't seem like we're getting it thus far. You're seeing significant gains, more record territory. 5,600 is the point mark that we've now reached beyond then for the S&P 500, closing again at a record high. So too for the Nasdaq Composite, again pushed higher by those tech counters. In fact, all 11 sectors of the S&P 500 managed to move higher than in yesterday's trading. It was the first time in over a month as well that the S&P 500 had moved by more than 1% in any direction, that is, up or down. So that's around 22 sessions at the very least then. So 1.02% gain, 56 points on the up then for the S&P 500. Even the Dow Jones actually managed to find some gain there, 429 points, just shy of 40,000 points there. Those moves, of course, all coming before that all-important CPI print anticipated then later today. We'll get into the details of that, but the market ultimately expecting it to move a little bit closer to 3% for the overall CPI mark. As I said, that S&P 500 and the Nasdaq Comp was powered by the tech counters. In fact, the Magnificent Seven has been one to really look out for as well in this. And question marks are, is the Magnificent Seven back? I mean, we've added as well AMD to the stock power, which has managed to move up nearly 4% then in yesterday's trade. But there's a broad sense of positivity still at play in some of these counters. In fact, so much so that you saw Tesla turn things around as well. Up until April, very significantly, up until around April the 19th, in fact, then you had seen somewhat of a decline then for Tesla's shares. And you can see all the way right up until this mark. And then all of a sudden you start to get of course, marks around whether Elon Musk would get his salary. That, of course, there was contentious at best. Plus, of course, AI strategy coming into question mark. Deliveries not necessarily looking as bad as some had initially thought then for Tesla. So is there perhaps a turnaround coming through in the stock? Not so long ago, it was one of the stock laggards as well then, now managing to move higher. In fact, 11 consecutive days of gains then for Tesla, now having its longest winning streak since June 2023. It was down 43% up until this mark, and now has managed to actually move higher. So far, then, year to date, as you can tell, 6% to the good. Now, onto your treasury market as well, then. Bonds pretty much steady overnight, and particularly even in Asia, then all waiting that CPI print later today. That will kind of set the tone for a lot of this market messaging. You're seeing the 10-year note then at 4.28, just below that 4.3 mark. 4.62 then for the more rate-sensitive 2-year note then as well then this morning. Out of the Asia market picture then, well, Nikkei crossing 42,000 points then today. More than 400 points gained, 1% higher, following on from that tech surge that we saw out of the US then just last night. And that has filtered through into this Asian market picture. Even the Hang Seng Index managing to gain 1.5%. Again, those tech players managing to move higher then. It does come amid a broader uptick as well in the Asian market this morning. Nikkei powered by those tech stocks, as I've said. On the data front, you did have core machinery orders in Japan climbing 10.8%. That was higher than the market's just over 7% anticipation there, although the data is mixed though, because there was a slip of around 3.2% on a month-on-month basis. Onto the European trade then, and this is what we're anticipating to get out of that market. Yesterday it did close higher. Investors turning their attention, of course, to that US CPI print. It looked like we could continue that uptick. Of course, the political dominant story has been the one to really focus on across Europe, but could things be finally turning the way of equities as we head towards another earnings season? Yes, stateside, you will have the banking counters tomorrow, but we'll begin, of course, that earnings season also to begin to make hay then as well this side of the Atlantic as well. The likes of the CAC 40 finally managing to find some reprieve, Karen.
Well, today we will see the release of the all-important US inflation reading for June. The headline reading is seen dipping 20 basis points from May to 3.1% on the year. Core prices are expected to hold steady at 3.4%. Fed Chair Jerome Powell reiterated to the US lawmakers that the central bank is independent in its decision-making, pushing back against suggestions that a September rate cut could be seen as a political move. Speaking on Capitol Hill on the second day of his testimony, Powell said rate decisions will be decided carefully.
Our undertaking is to make decisions when and as they need to be made, based on the data, the incoming data, the evolving outlook, and the balance of risks, and not in consideration of other factors, and that would include political factors. We will make those decisions. We have a long history of doing that, including during election years, and that is the undertaking we'll make. Anything we do will be very well grounded, and it's just not appropriate for us to get into the business of thinking about election cycles at all, one way or the other.
Jerome Powell there providing some colour around the interest rate story, and I think many in the market are characterising what we've heard in the last couple of sessions really as firmer signals around the Powell pivot, the pivot that started late last year, but it's been a long time as the market's been waiting it out for further information about the timing of those rate cuts. I mean, I was quite a slight twist yesterday because it seemed like fresh information giving us those signals. But what's the relevance of macro to the market at this stage? DataTrek had some interesting analysis, and they were saying if you look at the market so far for this year, there's been 130 trading days, but really just 14 of them have been responsible for the entire S&P 500 year-to-date gain of near on 17%. So really, we're talking about the action packed into 2 compressed weeks. If you take those 14 trading days, will impact them all together. So very small action and concentrated. In terms of the attributes that drove the market, there were 2 visible signs here. One was around interest rates being cut. The other was around generative AI, Gen AI, actually having some direct benefit. So those were the 2 drivers for market activity to the upside, according to this analysis. The other big point we're talking about, very muted records that we're just inching towards record after record, very small swings, less than 1% for so many sessions, 22 sessions without a 1% move. We obviously snapped that, so we broke out of some of the smaller ranges yesterday.
Yeah, and I mean, all those moves kind of just tell you then that it's just that wait and see mode, but still people feeling fairly bullish. The US economy, as we've continued to speak about, still maintains a sense of strength, right? And it's about whether that strength is now beginning to wane so much that it worries the Fed. And that's what the Fed has been speaking about. For the most part of this year, if not maybe a year, if not longer even, the focus has certainly been around that inflation number, right? That inflation print, getting that down. And as I said this earlier, we had almost forgotten completely about that labor aspect and the dual mandate here. And then finally making note of that dual mandate was Jerome Powell as well in his testimony to Congress, and really just saying that if we begin to lose that becomes a worry. But is it really right now at levels where you'd worry? 4.1, and even if it moves to 4.2%, is that then a worry for the Fed as yet? Or is it just because of the direction it then follows on to, and the underlying weaknesses? Because we've spoken about the...
Well, let's get into it. I mean, you've got this one particular metric that is seen as a lagging indicator.
Yeah.
So if you're also not getting going with any rate cuts, there is a lag in the lagging indicator. So it takes a while to turn things around. So I think there is a genuine concern that if you're starting to see signals that worry you now, you need to act soon, trying to get ahead of the narrative, ahead of the messaging on the unemployment rate.
Yeah, fully agree. What about the market side then, right? So we keep hearing wording on one diversification or perhaps just trying to find other gainers in this market. That doesn't seem to necessarily be the real threat. And I say that not because there aren't other market players managing to gain, but really their concentration on that top part is still there. They've moved things higher. It is the Nasdaq and the S&P 500 that are still managing to find those gains. And we hear analysts keep saying the market still needs a pullback.
Yeah.
Does it?
Well, here's some more analysis from DataTrek, and they're running through the Nasdaq saying up 80% since the December 2022 lows. That matches the last 4 recoveries of prior cycle lows back to the 1990s, except for 2020 if you take that out. So that is very similar to the other size of the rallies we've had. When it comes to NVIDIA in particular, I think that's chief amongst the concerns for some of the market. Some love it, they're right in, they're loaded up on NVIDIA, it's been a fantastic performer. Others were not involved, concerned about what exactly you're getting. NVIDIA's current 5-year return has bested Intel, Oracle, Microsoft's 5-year returns right back to March 2000. However, it still lacks Cisco's .com rally. So it's lagging behind
not
that.
at a Cisco moment.
Which suggests there could be a historical precedence for there to be further moves higher.
You know, we've also been speaking about Tesla and that massive gain, as I've just been noting on the wall, but I wanted to also just take a look at Apple. Do you know that very quickly, they were also a laggard in this market, right? Up until the middle of April, they were down 11%. Now they're up, the overall figure is 25.5% in 6 months. They had a low of 165, if you take a look at that graph, around April or so, in mid-April. Up 41% since the middle of April.
That said, in the past week, FANG stocks down 2%, semiconductor stocks up 4.3%. Again, very different pathways for FANG versus semiconductor stocks as we talk about tech at a record.
So are they finding that divergence or that sort of other stocks that are gaining in this time? That's the big question mark. We'll continue to focus on that, of course, and we'll have a lot of conversations of that around the table as well, even in today. But here's also what's coming up. NATO leaders set to unveil 40 billion euros in fresh military aid for Ukraine. We'll have the latest on that next. Plus, Samsung, they've launched a slew of new AI products. Take a closer look at that this hour. Our very own Arjun has been following that one. And also this morning, we're expecting the latest numbers out of DNB. We'll speak to the CFO, Ida Lerner. Don't miss that first on CNBC interviews at 8:30 CET.
Listen to CNBC's Beyond the Valley, the podcast that explores the biggest tech news from across the globe. Join me, Arjun Karpal.
And me, Tom Chitty, every week as we bring you insights into the top stories, unpack the latest trends, and find out where the industry is headed.
Now available on Spotify, Apple Music, and Google Podcasts.
NATO leaders are set to announce 40 billion euros in fresh military aid for Ukraine this year, according to a draft communique, falling short of the multi-year commitment sought by Secretary General Jens Stoltenberg. The draft document also strengthens NATO's language on China, describing the country as a decisive enabler of Russia's war effort. Steve spoke to US Permanent Representative to NATO, Julianne Smith, and asked whether allies should be concerned about America's commitment to the alliance.
This alliance has 7 decades of experience of dealing with political transitions on both sides of the Atlantic. What I see here in the United States is deep bipartisan support for this alliance by the American public, by Congress. Well, look, candidates say things on the campaign trail that sometimes don't turn out to be reality. So first, let's wait for our election and not assume any particular outcome. And then let's see whoever wins that election, what they actually do when they sit down in the Oval Office.
That bipartisan support is dependent on what Mr. Trump says as well. We know that on many, many issues, if Mr. Trump says something, then that Republican support can erode from a previous stance as well. Do you have concerns personally about the leadership that the US would provide if Mr. Trump is president?
I don't have concerns right now because I'm focused on the president that I'm serving under, obviously. But what I will say is that I think what should reassure all of us is the amount of burden sharing that exists across this alliance. You know that multiple US presidents, including President Trump, have been telling Europeans to do more for their own defense. And what Europeans have done over the last 10 years is they've responded. We started 3 years ago with 3 allies spending 2% of GDP on defense. Guess what? Right now in July of 2024, we have 23 allies spending 2% with more to come. So I think that trajectory of allies increasing their defense spending over the last 10 years with more to come, I think should reassure any U.S. president that that burden-sharing piece is solid and that Europe is stepping up.
Italy's foreign minister also sat down with Steve, responding to accusations the West's support for Ukraine is prolonging its war with Russia.
It's important to back Ukraine. Without our help, it's impossible to strengthen the Ukrainian army. If we want to achieve peace, as I said, we need to work for a situation, stable situation. We are not against Russia. We are in defense of Ukraine. We are not fighting against Russia. We are supporting the freedom and independence of Ukraine. It's not the same.
Putin is throwing the entire Russian economy at this war. The West is throwing a limited amount of resources into supporting Ukraine, an increasing but limited amount of resources. It is not creating any movement on the battlefield, which looks like it's creating maybe not a frozen conflict, but a very, very laboured conflict that could go on for many more years. Is Europe and NATO prepared for that?
Yes, but we need to achieve a solution before the long term. We need to achieve a good solution. A good solution is peace with justice. Justice, the freedom of Ukraine in short term. Okay, it's impossible to do it tomorrow morning, but next year I think it's possible to achieve this result. Working hard, supporting Ukraine. I think it's important also diplomatic action, but in the same time we need to strengthen Ukraine at military level, at financial level, and at political level. This is our job as European Union, as NATO.
Sweden is attending its first NATO summit since becoming a full member of the alliance. Prime Minister Ulf Kristersson told Steve what NATO membership means for security in the Nordics.
We happily admit that we did apply for NATO membership because of what happened in Ukraine. We seek more of common security. That was the fundamental reason. But when we say that, we also say that we have things to bring to the alliance. We bring stability in our part of the world. Just have a look at the map. I normally answer we bring geography and capacity to the alliance. The northern part of Europe becomes a more solid NATO soil, including the Baltic Sea, and we bring quite a few unique military capacities into the alliance as well.
Swedes seem to feel safer as part of the alliance, according to the opinion polls, and yet it must have brought more attacks, more cyber attacks, more hybrid attacks, more threats, of course, from the Russians. Do you want to just tell us a little bit about how things have changed in recent months and years since Sweden got closer to NATO and then became part of NATO?
I think for most Swedes, this is not that new. We have been cooperating with NATO for such a long time. We've made literally everything except from being full-fledged members. And you can discuss why we did that, because if you are almost in the club, why don't be in the club and take full responsibility and have all the advantages as well? Russia has seen that as well. So of course they don't like our cooperation previously, and they even less like the fact that we now are allies. We haven't seen that much of a change. They speak in a hostile way. They use all their kind of hybrid methods. We are quite acquainted with them. We counter them quite well. We have a population which is very resilient towards, I would say, towards Russian attempts.
Norwegian Prime Minister Jonas Støre also caught up with Steve, explaining the language on China in NATO's draft communique.
We see NATO now threatened by NATO countries perceive a threat from Russia. It's in Europe. It's happening in a country which is not NATO country, but there are countries that feel that, very directly. Sadly, I would say, we have a lot of evidence that China is contributing to that war, directly or indirectly, and that is really to be regretted. But it's in a different category than the direct threat represented by Russia. So I think, we talk about China in this declaration, which is a very clear message about how we perceive them. At the same time, I believe that we should continue to deal with China. There are areas where we need to cooperate with China on climate change, on managing new technologies, but we should not be naive and be very direct in our observations and language about what happens.
Well, Anna Gilmore is head of country risk and geopolitics then at various Maplecroft and joins us in studio. Anna, thank you so much for the time. Appreciate it. I mean, one thing's for sure, they've certainly sounded a lot more committed to the fight then, particularly against Russia than ever. But was there somewhat of a need to taper expectations? Because previously they've promised a lot but haven't been able to deliver a lot because of so much cooperation that is needed in order to get things done.
Great, and thanks very much. Great to be here today. So very interesting how a lot of the communique was phrased, particularly in terms of talking about Ukraine's accession, in terms of irreversible, making a firm commitment to that. But there's still no definite timeline there. And I think that reflects the fact that it's very difficult for NATO as an organisation to set a timeline on when Ukraine can join, both because that could be seen as an escalation by Russia, and also because there are some internal concerns that within NATO some members might not be as pro-Ukraine joining in the short to medium term as others. So I think that's also played into the package that is shortly going to be announced as well. In terms of, you've seen it being announced by individual countries, you've seen it being announced by NATO as a whole. It's very interesting that you can see that some countries have stepped back from potential involvement. I'm thinking here particularly of Hungary, which has recently agreed what you might call an opt-out with NATO, where it will still remain part of NATO, very much so, but has effectively a non-participation agreement when it comes to Ukraine. It doesn't support, it doesn't take part there. So this is about managing those sensitivities within NATO as well.
Yeah, in trying to manage those sensitivities though, I mean, could perhaps another or a further agreement and commitment to defense spending reaching that 2% target and beyond for some nations, would that have not sent an even firmer message to say that this is how much more committed we are? Yes, we've seen that perhaps from the UK Prime Minister, but it feels like it hasn't been a full-on commitment by all parties.
Well, I think it's very telling that this year, for the first time, NATO on average hits that 2% defence spending target. I think 23 countries within NATO have now hit that target this year, including Germany. As you mentioned, the UK, Keir Starmer has already committed to increasing that to 2.5%, continuing the policies of his predecessors. No timeline on when that 2.5% will be hit. That's obviously pending the recently announced spending review. But I think the language there is around the continuation of the trend towards more military spending, which, as you say, sends that firm message there around commitment. I think Starmer's language around giving that defence spending for as long as is needed is intended to give reassurance to Ukraine and send a strong message as well.
I want to pick up on your points around entry-proofing membership for Ukraine to NATO, because it did seem as though some of the members were trying to foolproof the membership process in case there's a Donald Trump presidency again down the track. Is there any way to provide some sort of ironclad guarantee for Ukraine to ensure the membership stays on track?
So in terms of membership, as I mentioned, there's no firm timeline, and I think NATO can't at the moment commit to that timeline beyond saying it's on track, it's irreversible, sending that strong commitment.
But is it reversible? Say if Donald Trump were to be elected again, could this be a reversible process?
I think NATO is preparing very much for the prospect of a second Donald Trump presidency and what that would mean for NATO. I think the language used here is very much sending the signal that there is that commitment to Ukraine. What NATO will be looking at is what NATO could look like with a second Trump presidency. And in that sense, Trump was very clear in his first presidency. He's been clear ever since in statements about what he wants to see from NATO, which was in his first presidency, increased defense spending, which we're now getting towards that. So in that sense, you can say it's moving in the direction that Trump wanted. He's also talked about wanting an end to the war in Ukraine, which is something that could be under discussion if and when there's a Trump presidency. But on that front, I would say that it's something that NATO has shown its commitment there. If the US wanted to push in a future scenario in which Trump were the president for a swift end to the conflict, it would be very difficult for that conversation to take place.
Just remind us around forcing a peace deal. This is what Trump has been talking about. And of course, the Europeans have been also considering whether there would be any prospect for such a resolution. But the reality is, as we look back, even just short term in history and what happened with Crimea, how skeptical would we be around any pause in fighting that saw Ukraine lose more territory? Wouldn't it just allow Russia to regroup and would be facing potentially the same threat in a few more years?
I think that's the concern that NATO has, that Ukraine has, and that's why this communique has sent a very strong signal. I think when you look at the state of the conflict at the moment, it's still very much in an active phase. Russia recently set out its demand for any kind of ceasefire, which are very maximalist. You wouldn't see much room for negotiation there. I think that sends a signal that the negotiations are not imminent. It's not something that's being looked at by either side in the short or even to the medium term. So I see that as very much a sign from both sides, and with ongoing NATO support for Ukraine, that we're not going to see a short end to the fighting.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.